how should markets actually look at this? And again, we're extremely respectful to the people that lost their lives, but this could have a huge economic impact as well.
It certainly could, and really right now we're still in the grounds of speculation. I mean, but what we do know is that the longer that China is in lockdown, the bigger the effect. The longer there is this uncertainty about the figure, that every day when there's more cases, the larger the potential impact. So the market, I think, is defensive. Today, perhaps we haven't seen the sorts of move that we've seen earlier, but really, I think since January, around about January the 21st, we have seen significant movements back into safe haven. And I imagine that by and large, that's the trade that's going to remain very much on people's minds, as long as the news flow remains in the same direction. So, for instance, in the FX market, it has been the yen, the Swiss franc, and the dollar remaining, the safe havens. Sterling, of course, pushing higher today, but that's different reasons. That was the Bank of England. And of course, as you mentioned, the edge has been taken off sterling gains by this news that we've heard in the last half hour or so about the virus in the UK. But I think it is going to be, safe haven for now. And then as we move perhaps into February, dependent on the news flow, it will be, well, what are the central banks going to do about this? Do they need to do something or not? And I think perhaps in the next few weeks, we'll have a little bit more information to try and gauge those reactions a little bit better.
Peter Schaffrik, will RBC change their global view and their major economy view off what we see in China?
Well, China is obviously very important, and we'll first of all have to assess clearly how big the damage is. And that depends on you. In your previous interview, we had it, how quickly are people returning to work and all of this. So at this stage, we haven't changed anything yet. We've just flagged the risks. However, having said that, for the US in particular, and we heard that from Jay Powell as well, the feed-through should be relatively slow, let's put it that way. For us in Europe, the situation is obviously slightly different. And if I may say, if I take a step back, the big thing that I think for markets over here is we came out of a phase of huge uncertainty about a whole range of things. We came out of a phase of weakness. We were just on the verge of bouncing back, and this is sort of another thing that sort of whacks us down. So I think from that perspective, I think the crucial story is if that bounce back story needs to be changed wholesale. At this stage, I don't think so, but it's early days.
Yeah, I look, Jane, at all these dynamics, the litmus paper. The markets are fairly quiet this morning. How have you adjusted your foreign exchange calls? Is there an opportunistic trade here, or is there a defensive safe haven trade that makes sense?
Well, I think a lot of those trades, of course, have been used over the last week or 10 days or so. And certainly I think, that the strong dollar trade is still very much there. Now, that is something that many people had anticipated would end during the course of this year. But certainly, the dollar remains one of the best performing currencies. And I would imagine that as long as there is this degree of uncertainty, as long as people don't particularly want to buy risk, as long as they don't really remain very skeptical of, say, emerging markets and other risky assets, the dollar is going to remain pretty firm. Now, the yen could certainly outperform, but again, it's very difficult at this stage to know how long this trade really remains relevant, and this depends very much on the news flow over the next few weeks. On the other side, the currencies and the commodities which are going to remain vulnerable are those very sensitive to growth, very sensitive to China. For instance, iron ore could be vulnerable, and on the back of that, the Aussie dollar could remain vulnerable. So it's very much dependent on the news flow. But for now, I think it's the safe havens remain in vogue, and the ones more linked to commodities will remain out of favour.